Imagine this. You've been driving the same car for a few years. It looks sharp, it runs smooth, and you've built a bit of a bond with it. But now, the lease is coming to an end. The dealer sends you a letter. Would you like to buy your car? And suddenly, you're staring at a big decision. Should you buy it out or walk away? The truth is, making the wrong move here could cost you thousands of dollars. And in this video, we're going to break down step by step whether a car lease buyout is actually worth it for you. Stick around, because later I'll share a simple calculation most people completely overlook. And once you know it, you'll be able to answer this question with total confidence. Number 1. What is a car lease buyout, really? A car lease buyout simply means purchasing your leased car at the end of your lease term, or sometimes even earlier. The dealer gives you a set price, called the residual value, which is what they estimated the car would be worth when you signed your lease. For example, let's say you leased a Toyota Camry 3 years ago. The lease contract might say you can buy it at the end for $15,000. That $15,000 is the residual value. So, in plain English, a lease buyout is like the dealer saying, "Hey, we'll sell you the car you've been driving for this price we agreed on 3 years ago." Number 2. Why would anyone want to buy out a lease? At first glance, it might feel weird to buy a car you've already been driving. But there are some real advantages. For starters, you already know the car's history. You know if it's been babied or beaten up. That gives you peace of mind compared to buying a random used car. Second, sometimes the residual value is lower than what the car is actually worth today. Imagine the Camry example. If the market value is $18,000, but your lease lets you buy it for $15,000, you just scored a deal worth $3,000. And third, if you've gone over your mileage limit or your car has some scratches and dents, buying it might actually save you from paying hefty penalties when you return it. Number 3. When does a buyout make sense? Here's where you really need to pay attention. A lease buyout makes sense when 3 things line up. First, the buyout price is lower than the current market value. You can check this easily by looking up your car on Kelley Blue Book, Edmunds, or Carvana. Second, the car is in good condition and you like driving it. No point buying a car that feels unreliable or no longer suits your life. Third, you can afford the financing. If you need a loan to buy it out, compare the interest rates. Don't just assume the dealer's financing is the best. Check with your bank or credit union. Example, let's say your lease buyout price is $15,000. You check online, and the same model is selling for $17,500. That's a $2,500 advantage. If you also love the car and can get a decent loan, that's a green light for buying it out. Number 4. When does a buyout not make sense? Now, this is just as important. A buyout does not make sense when the opposite is true. If the buyout price is higher than what the car is worth, you're overpaying. Why spend $20,000 for a car you can buy used for $16,000? It also doesn't make sense if the car has given you problems, has high mileage, or you simply want something new. Remember, the emotional itch to upgrade is strong, and sometimes it's better financially to walk away. Example, if your Honda Civic buyout price is $18,000 but the market value is only $14,000, you're paying $4,000 more than you should. That's a hard pass. Number 5. How to calculate if it's worth it. Here's the part most people ignore. To really decide, you need to compare the buyout price with both the market value and your personal situation. Step 1. Look up the current market value of your car using trusted websites. Step 2. Compare that number with your lease buyout price. Step 3. Add in any fees. Sometimes dealers tack on a buyout fee of a few $100s. Step 4. Factor in potential mileage penalties or excess or charges you'd face if you return the car. Example, if your buyout price is $16,000 and the market value is $17,000, that looks good. But if the dealer adds a $500 fee, your real cost is $16,500. Still, it's slightly under the market, so it could be worth it. Number 6. Financing your lease buyout. Most people don't have a pile of cash lying around to buy their car outright, so financing becomes part of the equation. The good news is, many banks and credit unions offer lease buyout loans. These work just like regular auto loans. But here's the catch. Interest rates vary widely. The dealer might push you into their financing at 9%, while your credit union may offer you 6%. That difference could save you thousands over the life of the loan. Example: on a $15,000 loan over 5 years, the difference between 9% and 6% interest is over $1,200 in extra payments. That's real money. Number 7. Hidden costs you must not ignore. Here's something beginners often overlook. Owning a car long-term comes with extra costs beyond the buyout: maintenance and repairs. Up until now, the car was likely under warranty. Once you own it, you're responsible. Insurance costs. Older cars sometimes have lower insurance rates, but not always. Check with your insurer before deciding. Taxes and registration. You'll likely owe sales tax when you buy the car out, depending on your state. Example: if you buy your car out for $18,000 and your state sales tax is 7%, that's an extra $1,260 up front. Number 8. Early lease buyouts. Did you know you don't always have to wait until the end of your lease to buy out your car? Some leases allow early buyouts. Why would you do this? Let's say your car has skyrocketed in market value because of a shortage of used cars. Buying it early could lock in a lower price before the car appreciates even more. But be careful. Early buyouts often come with fees or the requirement to pay off remaining lease payments. Example: if your lease has 12 months left at $300 per month, that's $3,600 in payments you may still owe, plus the buyout. Number 9. Negotiating your buyout. Many people don't realize this, but sometimes the dealer is willing to negotiate. If the market value is lower than your buyout price, they might prefer selling it to you rather than sending it to auction. It doesn't always work, but it's worth asking. Example: if your contract says $19,000 but the car is worth only $17,000, ask the dealer if they'll meet you in the middle. The worst they can say is no. Number 10. Alternatives to buying out your lease. If a buyout doesn't make sense, you still have other options. You can return the car at the end of the lease and walk away. You can lease a new car if you like the flexibility of always driving something fresh, or you can buy a different used car on the market, which might be cheaper than your buyout price. Example: if your Nissan Altima buyout is $20,000, but you find a nearly identical Altima for $17,000 at a dealer down the road, buying that one makes far more sense. Number 11. The emotional factor. Money isn't the only thing that matters here. Sometimes, people fall in love with their car. If you've kept it in great condition, you love the way it drives, and you don't want the hassle of shopping around, that peace of mind may be worth paying a little extra. Example: maybe you named your Jeep Betsy, and she's been with you on road trips, first dates, and family adventures. In that case, spending an extra $1,000 might not feel like a loss. Number 12. Impact on credit score. When you finance a lease buyout, it creates a new loan on your credit report. This means your score could take a small dip at first because of the new inquiry and added debt. But as you make consistent, on-time payments, it can actually strengthen your credit score in the long run. Example: if you take out a $16,000 lease buyout loan and pay it down steadily for 3 years, you may boost your score and improve your ability to qualify for future loans. Number 13. Warranty extensions. When you buy your leased car, your original manufacturer warranty may be close to expiring. This is something many drivers don't think about. Some lenders or dealerships offer extended warranties you can purchase to cover repairs for a few extra years. While this adds cost upfront, it could protect you from big repair bills later. Example: a $1,500 extended warranty might feel expensive, but if your transmission fails 2 years later, that coverage could save you $4,000 or more. Number 14. Ownership freedom. Once you buy out your lease, the car is yours. You're no longer restricted by mileage caps or lease conditions. That means if you suddenly want to take a cross-country road trip, you can do it without worrying about penalties. Example: during a lease, driving 20,000 miles per year instead of 12,000 miles could cost you thousands in fees. With ownership, those miles are free. Number 15. Resale potential. Another angle to think about is resale. If you buy out your car at a favorable price, you could turn around and sell it for more. This is especially true in times when used car prices are high. Example: if your buyout is $14,000 and you can resell the car for $16,500, that's a profit of $2,500 just for executing the buyout. Number 16. Flexibility in paying off the loan early. Lease contracts lock you into terms, but with a buyout loan, you may have flexibility. Many auto loans let you make extra payments and pay off the balance sooner, saving on interest. This is something you could never do with a lease. Example: if you owe $12,000 on your buyout loan and make an extra $200 payment each month, you could cut a year off your loan term and save hundreds in interest. Number 17. Emotional stress relief. Leases often come with the pressure of inspections, fees, and the constant question of what's next. When the lease ends, a buyout removes that stress. You know exactly what you'll be driving, and you avoid the sales pitches and hassle of shopping for a replacement car right away. Example: many drivers say buying out their lease feels like peace of mind insurance because they avoid the uncertainty of negotiating with dealerships. So, is a car lease buyout worth it? The short answer is it depends. If the buyout price is less than market value, if you love the car, and if you can finance it smartly, then yes, it could be a fantastic move. But if the numbers don't add up or you're craving something new, then walking away may be the smarter play. The real key is doing the math and looking at your personal situation honestly. Don't just follow what the dealer says. Now I want to hear from you. Would you buy out your leased car if the dealer offered it at a discount? Or would you rather start fresh with something new?